topic of unlocking community bank and fintech partnerships. Yesterday, we talked about the fintech side of things, and now we get to hear from you about your perspective on the platform. So what are some of the most important considerations for a fintech to be aware of when they're looking for a partner?
So I think there's a couple of things they should start to consider. First and foremost, does the partner, whether it's a platform like us or just the bank directly, offer a set of APIs that represent the whole stack of all the things they need to do? Last night, it was quite interesting. I was meeting with a fintech based in Puerto Rico, and they've got some challenges because there's some local banking regulations that make things a little more challenging. And they're finding that because there isn't one player that can do the whole work, they're having to do all the contracting, all the stitching together, recreate customers everywhere, and all this stuff. And you can do that if you're really well funded and you've got big teams. But if you don't, or you just want to get going really quickly, you want to choose a platform that allows you to build everything, try it out, and then figure out what's the right bank to work with. Because different banks have different policies and risk profiles and appetites. And if you simply leave it up to the network or to hope that you're going to find the right bank for you, you're going to end up discontented and find that the constraints will be compliance specific. So some bank will say, yes, we'll bank you, but only with small dollar limits or with really onerous KYC criteria and so on. So if you're a fintech, it's important to go in eyes open and think about what do I want to build? Where can I buy or acquire as much of that tech stack in one place if possible? Because the moment you add two vendors, you've added a variant of complexity that most folks don't want to have to deal with. And then you want to figure out where can I get the best price and the least challenging compliance regime to go to market.
I think one of the interesting things about an early stage fintech is how can you possibly know what all those things you do need to know that you haven't yet encountered, and B, whether the partner would be able to service you now and in the future as you grow and scale.
I think this is super clear. Like, we're working with a lot of founders that are first timers in fintech. They know everything there is to know about their business. We're working with one founder who's an expert on the pet industry, working with another founder who's really dialed in on doctors and lawyers and has built scheduling software for them. Mm-hmm. They know there's a banking thing out there. They know it because they see the billions of dollars going into all the unicorns. Right. They don't know what to do. So we've taken a pretty deliberate approach of being consultative and educational in trying to help those fintechs learn what the goals are and what the objectives are. And then we've started to supplement what they can do with some resources on our side. Mm. So we've got a whole theme of how we're launching products and innovation into the marketplace, which is really exciting. And one of the things we've set up is a new team called Ground Control. Think of it like you're about to lift off, but you forgot that you actually have to put fuel in the jet and all that sort of stuff. We've got all of that team now to help the fintechs do the compliance setup, first calls to handle operational complaints and stuff like that. Because many of the fintechs come to us and say, hey, we just thought you would do that. And we're like, we can't, but you kind of have to pay for it. And we don't want to be in the business of building out these services bespoke for everybody else. So we're also building out a marketplace for folks that are experts in supporting fintechs and banks as well. People like Ubiquity, who have teams on demand that are ready to support the likes of Chime or Revolut or whatever. And then we drop ship them into your fintech to help you deal with the first day when someone says, why didn't I pass KYC? Or, a Reg E complaint, or my ACH didn't arrive on time. All of these things that no fintech that knew their own business, but now comes into the marketplace, has ever thought about before. Because as a consumer, when you open your wallet, you just expect to get paid. You don't understand the myriad of prepaid deposits that show up and ACH pre-notes and all this sort of nonsense. You don't know any of that stuff. But you need to know if you're going to offer these services to consumers.
Totally. So what is the benefit of having a direct relationship with a bank?
I think the key thing about having a relationship with a bank is that you will be able to articulate what you're doing and be able to work with the bank and understand what they want from a compliance perspective. If you're disintermediated, there's two things that happen. One is all your input's going to be filtered to a lowest common denominator of behavior. So a platform would say, okay, the standard rules are these are the rules, the bank's agreed to these rules, that's it, no matter, that's it, that's all you get. when you actually have a relationship with a bank, you can actually talk about your story. You can tell why you need something different. We've had a couple of fintechs come to us that weren't able to find the right home because they wanted to do interesting things around KYC, excuse me. And as an example, we had one fintech that's offering banking services to people coming from India when they land on the ground to do their MBA or their PhD or whatever. So these are consumers that have money. So it's not a challenge in that respect. But what they don't have on the day they land is a social security card. Mm-hmm. And traditional banking says, wow, you got to have a social security card. We can't open an account. Well, technically, the law just says you have to have proof of reasonable reason you're in the US, which could be a visa for a student or something like that, or an employment visa. And you have to have the ability at some point to step up and say, hey, we've let you operate like this. We're going to upgrade your KYC. And we've got banks that will do that, which now unlocks a new type of behavior. But if you're behind a platform that says, we're not going to let you talk to the banks, good luck with that, you'll just get a no to that question.
That makes a lot of sense. So how is Synctera's marketplace model different? What are the benefits there?
So the key thing is we've focused on bringing both sides of the marketplace together. And on one side, you have fintechs that want a full stack of product features, from KYC to ledger to printing cards to swiping cards for deposits, ACH payments, you name it. If you want to build a consumer fintech or a small business fintech, we can give you one-stop shop set of APIs. But what's interesting about it is we actually have a marketplace of banks. At the moment, we've got 5, actually 6 as of last week, and we'll probably be 10 banks by the end of the year. And each of those banks have different risk appetites. Some will say yes to crypto. Some will say no. Some will say yes to remittances. Some will say no. As a fintech, you just code to the same APIs. And our job is then to shop you to the 10 banks on the platform and get you the best price. And so we're doing a market making role of saying the banks want to make the most money, clearly. The fintechs want to pay the least amount. And there's an equilibrium that happens somewhere on price. And if you're a fintech, what you end up with is 2 or 3 offers from banks saying, hey, we'll bank you. Here's our pricing. And the pricing will have variance based on their perception of the risk of the fintech. Mm-hmm. It'll have schedule variance. Hey, it's more expensive, but I can launch you next week. And they'll also have contract duration variance. Some will say, I want 1 year. Some will say 2 years. So from a fintech, you get the full stack. You can just start coding. And you get the flexibility of finding a bank partner. Because right now, the hardest thing for most fintechs is just getting a bank at all. And on the other side of the marketplace, why the banks really love what we're doing is we let them sign the contracts with the fintechs. So we give our technology to the banks. The banks sell it to the fintechs. So that's the direct connection. We give the banks everything they need to operate fintech as a service inside their bank. So they're creating a new division called fintech banking. Mm-hmm. And it has reconciliation, billing, compliance, KYC, marketing messages, all the things that they would have done by hand. And then combined with a whole set of education and training to help the bank get comfortable with their regulators, know what they should actually do for a KYC program, and vice versa for the fintech, telling them what they need to do in order to come to market and so on. So it's the best of both worlds. Single access point from the fintech perspective, a marketplace of banks that want to do business with you. And then if you're a bank, the upside for you is we're cutting you into all the revenue. So in the past, if you're a fintech bank, primarily the revenue you're making is 20 to 30 bips of interchange on rev share on debit card swipes. Mm-hmm. And if it's a small business, maybe make 50 or 60 bips. In our model, we cut you into the revenue on KYC. We cut you into the revenue on ledger, fraud, AML, the whole stack. And so it's much more aligned interests. So if you're a bank, you probably make 2 times as much money with us as you would with someone else. And you get the full stack and you get the relationship with the fintech. So you can choose who you want to do business with.
Is it common for fintechs to outgrow or to switch their bank partners along the way? And how disruptive is that? So
it's relatively uncommon because it up until now, it's quite disruptive. And part of the challenge for that is that for many reasons, debit cards in the past used to have the name of the bank printed on the back of it. The phone number wasn't the bank's phone number, but the consumer thought it was. The phone number actually rings the fintech. It's all giant confusion. So if you ever go to like Bancorp's website or even Cross Rivers, they have a web page that says, if you're one of these customers of Chime or whomever, don't call us, call these guys. It's because we're not really we are your bank, but they know everything about you. So one of the great innovations we've done with MasterCard is remove the requirement to have the bank name on the back of the card. And why that's really valuable is when you want to have more than one bank, or you want to transition from one bank to another bank for whatever reason. Maybe the bank you're working with says, hey, we're more comfortable doing lending programs now, and we'd like you to migrate. You don't have to reprint all your debit cards. We can do all the routing in the cloud. So the physical card in our universe basically has cool brand name of pet bank or whatever it is. We don't call it pet bank because, we can't use the word bank anymore.
Bank, yeah.
You never could. Let's just put it out that way. So you have beautiful brand. You have MasterCard logo there. You have no card numbers, no mag stripe. You just have a chip and pin SIM card, and you have a tap and pay contactless NFC chip. And that's it. And it's super clean. It's all about brand, which is really the access. And it's the same thing that happens in Apple Pay, right? No one looks on the back of your app. No one flips their debit card over and says, who is the debit card bound by in Apple Pay? No one looks at that. If you really want to, we'll help you find that information. But our goal and what we've seen for the larger fintechs is mostly they want to have a second bank or a third even if they're getting really large, just to de-risk if any one bank has an operational challenge or something happens and they're like, oh, wow, I need to shift all my customers. Shifting customers is relatively painful at the moment because it involves the user basically saying, I opt into the new bank's policies, if you will. And right now, if the bank you're leaving is a happy bank and isn't angry with you, then they can provide KYC covenants. They can say, hey, you don't need to re-KYC to move from one bank to another. So that's good. But generally speaking, moving bank to bank is still relatively unfun. But what we can do with our platform is at least let you have a second bank or a third bank with no disruption at all.
Got it. And one of the things that's striking to me is this is the third year we've been doing the Embedded conference, and it sounds like the barriers to entry for a fintech are definitely coming down. It's a lot easier now, but it still seems somewhat complex. Like, how would you recommend as a fintech to get to market fast and begin iterating on an idea?
So I think the key thing is to find a partner that allows you to test early and test an experience out. So even at Uber, when we were launching Uber Money, we get to this conundrum of, well, we want to try something new, but the only way to do it is to print an actual card and have the program approved, even though it's not. All we want to do is give it to a few drivers and say, does this work for you? And so you go through all of this compliance work, which takes many months just to do your MVP alpha beta testing sort of phase. And what you really want to find is someone that can help you do that testing while you're building and run within a framework that allows for all of that until you know that your thing is working. We've built something really fun called T-10, which is basically a 10-step approach to getting to the launch day. But what's different about the way it works is the API keys that we give you are no longer constrained inside the sandbox. They're actually live API keys. And what happens is when you say, I want to print a debit card for one of your employees, an actual debit card comes. And it's a little bit fun. So what it means is you can do all of that testing pre-launch now. And I think that's going to shrink the timing down another 2 to 3 months because you can try for real. We constrain it. You can't spend $10,000 or anything crazy. And maybe we're not going to let you go to certain websites and stuff like that. But what's great is you can test for real. You can give 10 cards out and do some KYC, some real humans, and see what happens. And that's what's going to speed things up. Everything that we're doing is about speeding up the time or reducing the amount of time it takes to get to that first day when you try something for real. Because we've seen so many cool innovations starting to come through the woodwork that previously you couldn't do because compliance is such a heavy lift in banking.
You mentioned your experience at Uber. I'd love for you to describe what you built at Uber. And I'm curious how that informs the whole sort of ethos behind Synctera.
Yeah, so our team at Uber was amazing. So what we were really focused on is building a neobank for drivers. And it was a really fundamental core mission of us within the Uber Money team to help drivers with their common needs. One of which was something simple like giving them daily overdraft. So what would happen is many of the drivers would spend the money they earned on the platform every day. And so they'd start the next day and they'd need money for gas. And if you don't have money, then you have to make a bad choice, or you have no choice. You're basically saying, I'm going to take a payday loan from somebody for $50 to buy gas so that I can get back on the platform. So we innovated and gave them $100 free overdraft.
Mhm.
And that allowed them to get back on their feet, or not on their feet, but just literally to start the day and start driving and being successful. So the Uber Money was really that focus. It's like, how can you give bank-like services to drivers who need it most? A debit card that is free to load and they can use with discounts on gas and so forth. We
Mhm.
did that in the US. We launched it also in Mexico. In Mexico, it was a great unlock because 30-40% of the drivers that came to us at Uber had never even been banked before. Zero
Wow.
bank account. Not like they had one and it was a crappy bank account. They just like literally non-banked. I don't think unbanked. It's not like they made a choice. They just literally hadn't had one. But we
Mhm.
needed them to have one to be paid. And so it was really a focus on that. And then what happened was, even with our big team of engineers and product people and BD people and legal people, it was really hard. And if it was really hard for us with a really cool infrastructure, it just clearly signaled that there's so many cool ideas that just never see the light of day because it's just too hard. And so Synctera was formed really as that focus of, it shouldn't be that hard for a fintech to get started. We should be able to bring on lots of banks to give choice around what constraints around risk and appetite of risk the banks will have, and matchmaking in the middle to ensure you get the perfect launch.
So it sounds a lot like what you're saying, Peter, is that getting the fintech bank relationship right is crucial, I think, for launching a successful fintech. Can you talk about some of the key challenges inherent in building those types of relationships?
I think so first of all, yeah, it's super critical. You've got to have a really strong relationship with your bank because stuff's going to break. Someone's going to hit with fraud.
Hmm.
If you're a fintech and you don't think you're getting fraud, you're on really interesting enhancers. Because everybody gets fraud, and we got a lot of fraud at Uber because we were a honeypot for bad people. But in banking and fintech, there's things will go wrong, payments will get lost, and if you don't have a good relationship with your bank, you're going to end up in a place where the bank says, "Well, that's not my problem. You go solve that. Good luck with that." And the really good bank fintech relationships align on goals, they align on mission, they align on needs and desires. We've seen several fintechs come to us led by amazing founders who say, I only want to work with a bank that is run by Black or brown founders and stuff like that. So we've been working a lot to build up a relationship with a couple of MDI banks so that the fintechs can match interests and alignment and stuff like that. And I think that's really critical. But overall, like the things that you want to focus in on is having regular check-ins. There's no point being in the dark. You should align very clearly on when you're going to do something fun and interesting. So you don't want to catch your bank shorthanded when you say, hey, we're going to give $100 free money to every consumer that signs up in the next 24 hours. Because what's going to happen at the end of the day is you're going to have this reconciliation problem, which said you just gave 10,000 people $100, which means $1 million has to come from somewhere.
Mm-hmm.
And your reserve account doesn't have $1 million in it. Now, what do you want to do? Because at the end of the business day, that $1 million has to be in the FBO account. Otherwise, the FDIC will say, hey, you're not running a safe and sound bank. So constant dialogue, strong relationships, and good partnerships and alignment on success, which for both parties is growth.
Mm-hmm.
The banks want to see the fintechs grow. The fintechs want to see themselves grow. And everyone should be aligned on having a great customer experience. And that only can happen if you have a good relationship between the fintech and the bank.
I'm curious on the banking side of things. Are you seeing your banking partners? Are they in the business already of being partner banks? Is this a new business line for them? And what's the, I guess, competitive environment for them and they're thinking about their future business?
That's a great question. So look, I think we're seeing, I'll say 40-60% relationship between people that are doing it before and net news. So we have two fintech banks that have been in the market for a while, Coastal and CFSB, Coastal Community Bank. And both have been in the market, let's call it 3 or 4 years, doing various services. I think CFSB a little longer. And so they can obviously speak for themselves, but I would say what they see as attractive about us is incremental revenue beyond just the basic interchange model. They also see the goodness of being fully in the relationship with the fintech and not being disintermediated by a tech stack or a provider or something like that. They like the ability to have custom profiles around KYC rules and so on, which they would have done if they were the bankers themselves. And so it's very much serving up their pattern. On the other side, we have 4 or 5 fintech banks that are just starting. the likes of Lineage, which is based in Tennessee, Regent and Civis, and a few others that are brand new to this space. And so what we're doing with them is working them through how to talk to their regulators, what's the policies they want to have to do, how to interpret. So one of the things we do is we build a risk and compliance package. So we analyze the fintech and say, here's what they look like. Here's whether we think this is super risky, it's crazy, it's crypto for cannabis, or it's super basic. It's like an embedded finance use case for Ford Motor employees. Mm-hmm. And as we think about those use cases, helping the bank make good choices around their first one or two fintechs they want to launch with, until they get into a pattern of then being able to do one a month or even two or three a month.
And do you see the banks, I guess ultimately is the goal for them to funnel their partnerships all through Synctera, or will they continue to manage direct relationships?
I think so I would love them to give us all their deals, but I think the inherent disruptiveness of that would only come into play if there was something that the fintech said, hey, that platform wasn't working. The old platform wasn't working for me. Mm-hmm. So for example, like I'm sure Coastal and CFSB have a number of fintechs powered by Galileo and Marketo and so forth. Our business isn't to unblock, to blow those things up. That's not it. We are providing a back-end reconciliation and management platform that also works with those platforms like Galileo and others, which can make a central hub so that the bank can have one dashboard to look at all of their customer exposure, all of their risk, all of their balances, all of their reconciliation. And we basically give that as almost a freebie so that they can think about us being the backbone and any new programs come through us. And we'll see. I think, for a while, they're going to sort of take it, see how it works with us versus doing themselves. And I'm relatively realistic enough to say we're not going to get 100% of their business. Sure. But I think over time we show that we're much more efficient, and that will make it really attractive for them to want to put most of their activity on our platform.
That makes a lot of sense to me. We have time for one last question. I'm curious. You said you're adding a couple more banks to the platform by the end of the year. What does the rest of 2021 and 2022 look like for Synctera?
So I think we're right at the start line. It's kind of fun. So we onboarded 14 or so fintechs to our API stack in Q3. And I think we'll onboard maybe 10 or 15 this quarter as well, despite all the holidays and stuff like that. And what that means is we're going to start launching 2 or 3 fintechs a month as early as, in the next couple of weeks, actually in December, which is pretty scary. So everyone's like running around a little bit crazy and stuff like that. Next year, if things are going well, we'll probably be 100, 120 fintechs on the platform, and we should be about 30 banks. So there's a lot of growth in the marketplace that we need to build out. And as we start to scale, I think we'll get a lot more of the confidence from the bigger players who are saying, hey, I've been watching on the sidelines. Is it real? Is it going to happen? And we'll be like, yeah, it's real. It's working. Come on down. And so right now it's a lot of scaling on the operational teams. So our team's already pretty large. We're about 110 people already after a year, which is awesome. I'm really pleased with the growth. But it's program managers, it's compliance folks, it's operations folks, it's payment ops, all that sort of make it happen team that are being built out right now. And that's really fun. A little bit scary, but really fun.
Well, best of luck. Peter, thanks for joining us on the Big Bank Theory Conference, and good luck to Synctera.
My pleasure, Zach. It was great talking to you. And this is a great conference.
Thank you.